Darrell, let's get into that. Lighten up where? We're talking about the Nvidias of this world, the top performers of the last 12 months?
Yeah, I think you can certainly lighten up your equity exposure overall. I mean, I would take it first from small cap, which has been, a relative underperformer, battered and bruised. But I think you do have to lighten up. If you've enjoyed 24% return over the last 4 months, which is what you've gotten, November, December, January, February, 4 months, right? That is impressive. You'd be wise to take a little profit there. To the conversation you were having earlier, remember and recall sage words, wisdom says bull markets die in euphoria, right? To the point, there is no downside that anybody sees at this point. We are starting to approach a little bit of euphoria here, and I think you have to set that context correctly.
Let's get into that word, euphoria. So Savita Subramanian's come out over at Bank of America. She's gone to 5,400 from 5K. She says any signs of euphoria are thematic and secular. So we're talking about AI, Nvidia, we're talking about GLP-1s, we're talking about Novo Nordisk. Outside of that, where are you seeing what you would describe as euphoria?
I think you're seeing it in, you're definitely seeing it in technology, you're definitely seeing it in consumer discretionary, you're definitely seeing it in comm services, all the leaders that have continued to lead. For markets to really make that next leg higher, you've got to have 3 things happen, right? You've got to have breadth widen out, right? Narrow markets die painful deaths, right? I mean, 2023 was the narrowest market only to 2007. We know what happened in 2008, right? And if you go back and look at other narrow markets, 2020, 1999, 2021. Remember 2021 to 2022, what happened in 22? Big negative returns. What happened in 1999? In 2000, right? So narrow markets don't sustain that leadership. History teaches you that lesson over and over again. So you need breadth to widen out, you need earnings to participate, better fourth quarter numbers, right? We'll take the earnings growth, but think about it this way. If companies, even large cap companies, if their wages are still growing 4, 5, 6%, right? But their top line, we just saw the total sales number grow at 3, let's call it. I can't have my biggest expense line as a company CEO or CFO growing at 4 or 5% and my top line growing at 3 without starting to lay people off, without starting to roll the economy over in that sense.